Thanks for starting your week with us. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. We have a lot lined up for you today, so let's get started with a look at the day's highlights. Samsung Electronics reveals its findings on what caused its Galaxy Note 7 batteries to overheat and catch fire. With U.S. President Donald Trump in office now, what would happen if the Korea-US FTA were to be scrapped? What impact will it have on the Korean economy? These stories and more coming right up. After months of intense investigations, Samsung Electronics has finally revealed the cause of the fires in some of its Galaxy Note 7s. The president of Samsung's mobile division shared the details himself at a press conference here in Seoul and once again apologized for the incident. Our Kim Min-ji starts us off.
Samsung Electronics has concluded that batteries were the cause of some of its Galaxy Note 7s catching fire and not the internal structure of the handset or software. Samsung says tests were carried out on both batteries, ones used in the original phones and the others in the replacements. It concluded that the fires were caused by design flaws and manufacturing issues. In the original battery A provided by affiliate Samsung SDI, a design flaw in some cases triggered a meet between positive and negative electrodes, igniting a fire. In the replacement battery B, which came from a different supplier, there were welding problems which led to a short circuit and caused the copper to melt. Samsung also called in global companies, including Underwriters Laboratories, to conduct their own investigations, all of which announced similar findings.
We spent the past few months analyzing what went wrong from start to finish. Although the cause was a battery defect, we are responsible, as we set the battery specifications and were not able to catch the problem before the launch of the Note 7. We will work to win back trust and implement measures so that such incidents never happen again.
Samsung said it has implemented a broad range of internal quality and safety procedures to prevent any recurrences. It has also formed a battery advisory group of external advisors, academic and research experts to ensure it maintains a clear and objective perspective on battery safety and innovation.
Samsung Electronics underestimated the danger of lithium batteries. Samsung is not the only case, actually. Nokia had this problem, and you will see Apple iPhones exploding as well. But it happened much more frequently in the Note 7. And that was because of those constraints. A big battery in a very thin, compact device. Samsung will now thoroughly test the stability, and they will place more margin for safety, such as sufficient space within the machine.
Experts say while Samsung has been quick to clear up the situation since its global recall program back in September, the tech giant will need to make sure it follows through with its lessons learned and prevents similar problems from erupting with its next release. Kim Min-ji, Business Daily.
Financially troubled companies are looking more reluctant about the idea of filing for a corporate debt workout amid declining support from creditor banks. According to data released by the Financial Supervisory Service on Monday, only 5 big firms requested debt restructuring last year, despite there being 11 companies with poor credit ratings requiring action. The number of firms last year was also much smaller than the 13 companies in 2015. The decline is attributed to the reluctance of creditor banks, which are themselves troubled by low interest rates and paltry profit growth. Korea's 3 biggest shipbuilders are forecast to have posted improved earnings last year compared to the combined $5 billion deficit logged in 2015. According to industry tracker FN Guide, Korea's largest shipyard, Hyundai Heavy Industries, is estimated to have clawed in $1.4 billion in operating profit, the only player expected to have inched back into the black. Strong performance by its oil refining subsidiary Hyundai Oil Bank is set to have boosted equity gains as the company brushes off losses from offshore facility projects. While both Samsung Heavy Industries and Daewoo Shipbuilding have not managed a full turnaround, their shipyards are forecast to have narrowed their losses. Despite going through one of the worst droughts in orders last year, experts say that the overall improvements are due to major restructuring efforts. After a weekly drop, the Korean equity market fluctuated on the first session of the week. Trading still seems to be sluggish just ahead of the Lunar New Year holiday here in Korea. We're now joined by our markets contributor, Choi Jin-seok, to talk about overall stock market performance and upcoming market events. Hello, Jin-seok.
Thanks for having me.
So how did the Korean stock market close on the first day of the week?
As experts projected last week, the market showed very limited volatility on the first session of the week. The Kospi rose by 0.02% to close at 2065.99, while the Kosdaq followed with an almost 1% downtick to close at 615.99. There are both positive and negative catalysts for the Korean market right now. Uncertainty surrounding the new U.S. administration led by Donald Trump and concerns over trade protectionism are still damaging market sentiment. However, expectations for better corporate earnings last quarter seems to be a positive catalyst. Therefore, we're still seeing a mixed picture throughout the market.
Now, as you said, companies have been reporting robust quarterly results in the fourth quarter. So with that, what companies in the U.S. are expected to draw attention this week?
Global tech giants will unveil their quarterly results this week. Yahoo will report earnings on Monday local time, Johnson & Johnson on Tuesday, Qualcomm on Wednesday, and Intel, Microsoft, Alphabet, and machinery company Caterpillar on Thursday will follow. So far, global companies have met such high expectations. Market research firm FactSet says with 12% of the companies in the S&P 500 reporting actual results for Q4 2016, 61% have beat the mean earnings estimate and 47% have beat the mean sales estimate. The blended earnings growth rate for the S&P 500 is 3.4% as well, which is why the earnings season is expected to remain a positive catalyst throughout global financial markets.
Now, global economic indicators are also giving a boost to markets as well. So what type of data should investors be looking at this week?
First of all, housing data from the U.S. will be reported this week.
Okay.
The leading indicator of the country will also give hints on economic conditions. Over in Korea, the country's GDP growth figures will be announced on Wednesday, and the same data from the U.S. will come out on Friday. As consumer prices and growth figures from China have met market expectations, experts and investors expect economic data reported this week to follow positive trends. Investors also need to keep a close eye on the reaction of currency markets after the data release.
Now, despite the inauguration of Donald Trump over in the U.S., there still seems to be a sense of uncertainty in the markets. Why so?
Global financial markets didn't really react much to the inauguration event, so it is safe to say the concerns surrounding the event itself are now mitigated. However, Trump didn't really give details of his future policies during the event. That's why experts and investors are still uncertain about what will be happening going forward. Moreover, Trump emphasized he will focus on goods from America throughout the inauguration speech. That's why concerns over protectionism have been elevated. Over the weekend, U.S. Treasury yields fell because investors in the Treasury market were disappointed that Trump didn't give details of fiscal stimulus policies.
Now, we're just ahead of the Lunar New Year holiday here in Korea. So do experts think that the sluggish market trend will continue at least for a while?
Similar to market movements today, we can expect low volatility and consolidation at least before the Lunar New Year holiday. That's why experts still advise investors to take time to adjust their investment strategy rather than taking action. However, after the holidays, we have a big market event, and that is the January FOMC. Since the Federal Reserve signaled 3 interest rate hikes for 2017, investors need to take a close look at what Fed Chair Janet Yellen will say through her press conference as well. If the Fed wants to raise interest rates 3 times this year, the bank could pull the trigger in March along with June and December. Therefore, any signals of an imminent rate hike might spook market sentiment going forward.
All right, thank you so much for the outlook today.
Thank you.
U.S. President Donald Trump has vowed to renegotiate the terms of the North American Free Trade Agreement with the leaders of Canada and Mexico. At a White House event on Sunday, Trump said that he has plans to meet with Canadian Prime Minister Justin Trudeau and Mexican President Enrique Pena Nieto and will begin discussing the terms of the agreement with them. Trump said that the renegotiating the trade pact will benefit not just the U.S., but the other two countries as well. The new White House website says that the U.S. could withdraw from the deal if Canada and Mexico do not agree to terms that offer American workers a quote-unquote fair deal. NAFTA has been enforced since 1994. And of course, Korea is no exception when it comes to countries closely watching the new U.S. president's moves on global trade. One research institute has looked into what kind of impact a canceled Korea-U.S. free trade agreement could have, and the figures are substantial. Our Eunice Kim has the numbers.
As newly minted U.S. President Donald Trump has once again vowed to make all decisions, including trade, in the interest of the American people, major ally and exporter Korea is taking note. The Trump White House has yet to single out the Korea-US FTA, as it already has with NAFTA and the TPP. But should it come to a reneging of the trade pact, the impact would be felt. According to calculations by Hyundai Research Institute, a dissolution of the two countries' free trade agreement would add up to a $13 billion loss in U.S.-bound exports through 2020. That would lead to some 127,000 lost jobs over the same period. The report also looked into the indirect impact by way of China, Korea's #1 trading partner. It found that for every 10% cut in China to U.S. exports as a result of steeper tariffs, it would slash Korea's exports to China by 1.5%. In dollar terms, this amounts to almost $1.9 billion when adopting trade figures from last year. Falling exports of intermediate goods like semiconductors, displays, and car parts stand to quicken as China further cuts their imports for building finished goods bound for U.S. markets. The possibility comes as Korea has shown signs of a turnaround from its 2-year export freefall, registering much welcome gains in November, December, and the first 3 weeks of January. But with a Trump leadership potentially challenging the bilateral free trade pact in place since 2012, the cautious optimism that had been revived may be blown with the wind. Eunice Kim, Business Daily.
Korea's number of unemployed, when including a wider range of people outside of official jobless data, has hit a record high. According to a report released by Statistics Korea on Monday, the number of all people considered to be in effect unemployed surpassed 4.5 million last year. Now that's 4.5 times the number of officially unemployed people last tallied last year. The figure includes young job seekers, people who work less than 18 hours a week, and people who have quit working. Job seekers are categorized as a population that's not economically active. The number of jobless people has been on the rise, increasing by over 270,000 and nearly 150,000 in the past 2 years. Korea's rising unemployment rate has raised concerns that the job market could continue to be sluggish for a while, based on the lingering uncertainties in and outside of Korea, as well as the ongoing government-led corporate restructuring drive. Imported eggs from the U.S. are now on the shelves at large supermarkets after quarantine procedures were finalized over the weekend. According to Lotte Mart, a tray of 30 eggs is now being sold for about $7, down from what was roughly $9 a tray. The government's subsidies on shipping costs are seen as having helped push down prices. It's reported that sales have been smooth so far. Roughly 100 tons of eggs were flown to Korea from the U.S. about a week ago to help ease a supply shortage stemming from the worst outbreak of bird flu in the country. The latest Big Mac index released by The Economist suggests that the Korean won has further depreciated in relation to other currencies from 6 months ago, falling 2 spots on a list of 56 countries. Korea's index was at $3.68 on the list announced earlier this month, which shows the won is undervalued by over 27% against the U.S. dollar. The Big Mac Index is an informal way of measuring the purchasing power parity of countries by comparing dollar-converted prices of Big Macs against the cost in the U.S. The lower index a country has, the more its currency is undervalued. China's index was at $2.83, implying a 44% undervaluation of the yuan. Switzerland, Norway, and Sweden were some of the countries with overvalued currencies, according to The Economist. And that brings us to the end, but we'll be back tomorrow with more of the day's top business stories, so don't forget to tune in then. Thanks for watching, and see you soon.